Welcome to the segment on market mapping. Here we will discuss what a market map is, why we use market mapping in the first place, and how we draw a market map. Now rest assured, market mapping is a lot simpler than it sounds. It's simply the process of drawing lines on a chart, whether it's horizontal levels of support or resistance, trend lines, trendline support, trendline resistance. That is essentially your technical analysis and your market map, and your projection as to where price action is most likely to react to and interact with in the future. It is by this process whereby we identify market structure and probability within the markets. What has happened in the past is likely to happen in the future based on how price action has interacted with our horizontal levels and trend lines on our market map. Typically we carry this out starting on the higher time frames, and we churn down to our time frame of choice which we trade off. Like for example, if you trade the daily, we start and we do our technical analysis on the weekly first, then we go down to the daily. If you wanted to be very meticulous about it, you could even start your technical analysis on the monthly, then go down to the weekly and then the daily. But why do we bother doing this in the first place? Well, there are several reasons, in fact. It gives us a measured way to identify key turning points in the market in advance of the price action having reached them. And that's fantastic if we're able to do the work, say, on the weekend when the market's asleep, in advance of the trading day ahead, so that if we see a trading opportunity at the last moment, it won't be an excited entry. We could say to ourselves, well, I was planning for price action to come to this level. It looked likely it was going to. It has. Great, I've got my setup and I'm going to trade it. So you're essentially stalking the potential trade setup well in advance of it manifesting itself. That's the difference between having a planned entry well in advance as opposed to a rushed entry, which is the last minute dash into the market through the fear of missing out. Drawing a market map also gives us a way to filter out the noise, which is essentially the market at the periods of time between it reaching one level, which we want it to interact with, and another level. Between those levels, we're not interested in trading it. We want it to get to our level before we're even half interested in trading the setup. And it's through this drawing the market map in advance that we're able to eliminate some of the most rudimentary and amateur kind of impulses of wanting to get into the trade for the sake of it. We could just simply tell ourselves, well, we're not going to get into the trade unless the price action has got to our level on our market map, and we've got the price action set up as well. So like I just mentioned, if we're trading, say, the daily, we want to do our technical analysis and draw our levels, whether it's levels of support, resistance, or trend lines, on the monthly chart first. Then we churn down to the weekly and do exactly the same again. And then we go down to the daily and do exactly the same again by drawing our levels of support and resistance and trend lines on. And you'll find out through doing this, in this order, that when you go from the monthly to the weekly, you'll find that half the work is done already. And when you do your analysis on the weekly and go down to the daily, you'll find that most of the levels on the daily have already been taken care of because you've already done that on the weekly when you're analysing the weekly and the monthly. So it's a great labour-saving device, certainly starting off on the higher time frames, hard to the one which you're trading off. On the flip side, if you're trading the hourly, then it makes abundant sense for you to start your market analysis on the monthly, then the weekly, then the daily, then the 4-hourly time frame, and then the hourly time frame. So in summary, in order to draw a market map, all we need to do is look out for key, obvious levels of support and resistance on the highest time frame you can, on the time frames in between that, and the time frame which you're trading. So we'll start off with pound CAD here on the monthly, the highest time frame or the governing time frame, and we can see here that we've drawn the levels on, coded the monthly, and then we've gone down to the weekly, like so. And we've drawn the levels which we haven't been able to see on the monthly, but we now can on the weekly, and we've drawn them in a different colour, blue. Obviously, drawing your levels in different colours according to the time frame you're on isn't essential, but we're just doing it to illustrate the points to you. And And once we've identified our levels on the weekly time frame, we can go down to the daily, as this is the one we trade. And we can see here that we can, coded in black, we can see there are certain levels, soft levels of support and resistance, which were not visible to us on the monthly or the weekly, but now we can see them on the daily. And we can also see that the monthly and the weekly levels are already drawn for us, so we've done that hard work already in advance, and we've just got an extra bit to do with the daily levels. And that's it. That's as simple as it gets. So we can see here with our levels of support and resistance, we cite price action and where it currently is, just high testing of this level here. So anything above it in a range bound market is potentially going to be a sell level. This is a high test bar of this current sell level as it is. If it comes up to this level here, then we'll look to sell yet again. If it comes up to this sell level, we'll look to sell yet again. And of course, the levels which adhere to the higher time frame, like the weekly level here, is going to be less strong than the monthly level. However, we have no idea how strong the level or how good the move is going to be until it actually happens. So it makes sense to have these levels already drawn in and take the trade regardless, provided we've got our price action set up here. And on the flip side, we've got potential buy levels which have manifested themselves based on the daily, weekly, and monthly time frames below the price action. So we'd look to buy off these levels as and when price action comes down to here, here, or here. So let's take a look actually on the charts. We've got pound CAD on the monthly, and let's have a look to see if we can identify these horizontal levels of support and resistance. You can see we've got a level just here. Please bear in mind that it's always a better idea to pay closer attention to the present, bearing in mind it is the monthly, and we're spanning as far back as the early 1990s here, which is a good 20 plus years. So don't get too caught up in finding levels which haven't been tested in like 10 or 15 years time. We just want to get an appreciation for it. We've got a level just round about here. Been tested several times. And if we zoom in slightly, we can see that, well, price action hasn't really been going anywhere for quite some time. So plot a level here. We've got a very decent level of resistance here, and also decent level of looking support. There we go. So we've plotted our levels on the monthly time frame. Let's churn down to the weekly, and lo and behold, we can see that our levels have already been drawn thanks to our work on the monthly, but we'll be able to spot some more levels which were not necessarily apparent to us when we were looking at the monthly. So we can see here that from looking at the weekly, we've got a level potentially here, like so, and we can see that we've got certain intersections here. So this qualifies as a level, like so. So it's pretty convenient. We've got two levels on the monthly and two on the weekly as well. Let's see what the daily is saying, the time frame which we trade off. Well, most of the work's already been done for us, fortunately, thanks to our analysis on the monthly and the weekly. But let's have a closer look here. Where could there be any hidden daily levels which we couldn't see on the weekly and the monthly? Well, we've got touches here. We've got a soft level of support here. We've got several intersections or points where the price action has rejected this level, this daily level. And we've also got a decent level all the way down here. We can see that price action has rejected it on several occasions. So that's pound CAD, a random cross-currency pair. But you can see here that even though we're range bound, we can see that we've got monthly, weekly, and daily levels, and we've got our market map drawn in advance of the price action getting there. So we can tell ourselves if price action gets this level here or this level here, we could look to sell, or if it goes down to this level here, or even here, that's a prime opportunity to potentially buy. So here's another example of how we do this, just for your information. We're looking at Euro New Zealand. First and foremost, looking at the monthly, looking for key levels of support and resistance on the monthly time frame. Then we scroll down to the weekly, and we are able to see a lot more on the weekly. That enables to give us levels which we would not otherwise have seen on the monthly time frame, and we've drawn them in on the blue. And third and foremost, we've got the daily. And as we've already got the monthly and the weekly levels drawn for us, it makes our life nice and easy. We're able to draw on the daily levels, enabling us to conclude our market map and the levels where we can anticipate price action to turn. As you can see with Euro New Zealand at the time of producing this, it's nicely trending down on the daily, so we can reasonably expect, based on the technicals, that price action is going to turn at this point right here and make a new lower low, as we've been making lower highs and lower lows. So if we look at Euro New Zealand on the monthly time frame at this chart, we can see we've got all the data since 1999, and we can draw our levels of support and resistance based on what we have here. So let's identify common points where we can see intersection happening. We have one here, although it's hardly earth-shattering. We have 2 points here. You can see the intersection this occasion, and it becoming old support becoming new resistance here. That's a decent one. And we've also got a level just like so. On this occasion here, back in 2003, 2004, 2008, and testing as resistance in 2011. So that concludes our work on the monthly. How about the weekly time frame? Here we're able to see a little bit more, i.e. key levels of support and resistance and trendline support and resistance we were able to identify on the monthly. And what we can see here is a very decent trend downwards with key lower highs and lower lows. You can see we can join these peaks up as it makes these lower highs and lower lows, and also align these troughs as well. They seem to be intersecting perfectly. And it's very seldom we get a trend this uniform on the weekly time frame, yellow low in the daily. But let's see if we've got any horizontal levels which conform to this as well. Got a horizontal level here. You can see these following points testing as resistance. We've also got one a little bit more recent. It's tested down here back in July 2011. Last tested in 2005, so you could say this level certainly has memory. And we can reasonably say, well, if we get a false breakout from this level of trendline resistance and it tests this level here, then we can reasonably expect a downward move thereafter. But anyway, that's the weekly. Let's see what the daily is saying as well. Okay, well, we're now on the daily, and it doesn't really tell us anything we don't already know thanks to our analysis on the weekly and the monthly time frames. It looks like we have a level here. Yep, extends right across. But how about where else? Looks like we've got a level here as well in the daily, but looking at the chart, it's not exactly likely that price action is going to be hurtling up to these levels anytime soon, in all honesty. If we scroll in again, we can see that we could potentially anticipate a level here which is already broken. And that's it, but we've got our levels on the daily, weekly and monthly plotted out here in advance of the price action getting there, so we can sit back and only be interested in this currency pair as and when, or if as and when, the currency or the price action gets to the level. In the meantime, we can consider the price action just to simply be in the noise zone, i.e. in a zone in between the levels where it doesn't really look like there's any high probability trading opportunity attached to it. So this is how you draw a market map. Use all the time frames above the one you're trading. Draw key levels of support and resistance and trend line support and resistance, and there you've got your market map.